Good morning, everyone. Bob Iacchino along with Mike Arnold from Path Trading Partners. It is March 29th, AM Path Chat covering the Forex markets. It is Brexit Day. Today is Brexit Day. Most of the economic calendars that I double-check my information, I cross-check my information on, all have this particular event as of high importance. And you can see a sterling chart in front of you. You can see there has been some activity this morning already, although I question why it has a high degree of importance. They are basically sending a letter via ambassador to the European Union. Theresa May is sending a letter that triggers the talks of the UK exiting the EU. Now, it is now official. They are exiting. There's no turning back. There was no turning back anyway once the lower house and upper house approved the framework of the deal to exit. But the letter's being sent right now, scheduled for 7:30 Eastern Time. And it is about 7:32 Eastern Time as we record this. So the British ambassador to the European Union will hand President Donald Tusk a letter invoking Article 50 of the Lisbon Treaty. That's it. Now this starts the gun on sort of the 2-year exit negotiation process. It is a 2-year process. So, yes, it's an important event historically. Market-wise, we are seeing movement in the sterling, but we've seen movement over, I'd say, the last 3 days. We've seen pretty good movement. You can see that by these 3 bars right here, 1, 2, 3. We're getting a little bit of a rally right now. So we've got pending home sales in the U.S. later. We've got U.S. crude inventories. Yesterday, we had the American Petroleum Institute's report, and it reported a build of 1.91 million barrels of crude inventories. That is a little bit less than the expectation of a 2 million barrel build for this particular number. But we saw another draw in gasoline, which I talked about in my commentary yesterday for the CME. So we've now got 3 weeks in a row of gasoline draws, fairly large gasoline draws, and that will, at some point, start to work its way into the crude inventories. So let me turn it over to Mike to show you what he's seeing on the FX charts. Mikey, it's all yours.
Okay, thank you very much, Bob. Saw some interesting movement already in the pound. Maybe the letter was delivered. Not much going on in the euro right now. Just wanted to zoom out for a bigger picture again. Sometimes helpful to keep that in mind. Here's a weekly chart. See, we've run up, we got above this prior resistance area. Now we're pulling back to it and testing it as of support. So we will see if that holds or if we fall back in this range. That's what we're watching on the bigger levels. So now on the daily, back on the daily time frame, pulling back into this key prior breakout area, which we generally define as it's not a specific level, it's a window. So it'd be somewhere around this big window that I just put on there. Well, we'll be watching for key support. So if we continue to pull back, we're watching for right now where we're at, this 107.81.80 level is very key on a further pullback, watching for the 107.51 to the rising rotation zone 107.41. That's going to be the next major pullback area. If we turn around and go higher, next area of resistance 108.03 to 108.11, then we have a significant level at 108.17. So just above 108, lots of resistance up there. Then above there, we're looking for a possibility of a rally all the way back to 108.47 to 108.54. which would be here. In the pound, you see came down, key significant level, actually broke below the rotation zone and the 50 for a little bit, then snapped back higher. If it continues to rally up, 124.82 to 124.88 is going to be key resistance. If it does get through there, then the next level is 125.16. followed by this retest of high areas made earlier this week and a lot of target areas and GAN levels right around 125.54. Then above that, we have a declining 200 and a trend line that would have to get through. If we pull back again, 124.25, 124.07 are the next key levels. And if we break that, the 123.87 to 80 area, very, very key support. To put this in bigger perspective, we fell into this range since September or beginning of October on this big candle down. We've remained since October of 16 in this range. So we've moved back and forth, but nothing, we've not been able to break out on either side. So you see a couple big moves here, but in the context of the way it has been since last October, this is just noise within this big horizontal channel. Yen, dollar yen, has moved back up, tested the declining rotation zone, and the prior trend line turned a bit lower. If it continues back down, the 110.64 level we've talked about repeatedly is going to be key. Breaking through that, you're looking at about 110.26 to 110.11, which we have defining points. We have prior lows, and we get right above that, we have the rising trend line, so that's going to be key support. Once that is broken, if it is broken, the next levels down are about 109.44 GAN level projection and a larger time frame fib and GAN level below that. If it rallies back up, key resistance right around the 111.27, followed by 111.45, and then a whole cluster in around 111.65 of resistance. If that all is broken, next level up is 112.13, where we also have the declining 21 upper end of our rotation zone. Swissy, pretty big reversal over the last 2 days. We just got through the slightly rising 200, 99.50, 99.51, and 37.5% GAN level on a continued rally up. If we can get through this declining trend line, next resistance 99.71, where we also have the declining rotation zone. And then above that, we have end of a clear path move and another GAN level 99.92. Turning back down, if this resistance holds, support right around 99.13, followed by 99.02, and then possibly all the way down to 98.91. Aussie yesterday came down, tested the 62.5% GAN level and one of our significant levels, which held and rallied back up. Today, slightly above the 37.5 GAN level, 76.52. If we get back above there, watch for a possible retest of 76.74, where we have GAN and a significant level. And then if it gets through there, 76.85 is going to be the next key one. If we pull back, support, pretty significant support around the 76.20 level. You can see how that's played out over the last few days, which is also a 50% GAN level. Below that, then we'd be looking for the 76.02, followed by the 75.93 to 75.88 area. CAD really caught in this range over the last few days. Been rejected above the 133.93, 134 level multiple times. Now pulling back. Right now we're right at a GAN level 133.66. On a further pullback, watching for support right around 133.40, then 133.39 to 133.22 is going to be key. If that is broken, watch for a possible move all the way down to 132.97. If we do rally back up, we need to get above that 134 level, and then we could possibly rally to 134.41, and then the 134.64 is the next key level higher, but we're really stuck in this range. So if we do get out of it on either side, watch for possibly a sharp and sudden move. Finally, Mexican peso moved back up last few days, retested our significant level at 19.0277. It's turning back down, right now trading at a GAN level 18.9326. If we go lower, again, don't have much support besides yesterday's lows right around 18.8101, and then below that 18.7416. On a move back higher, resistance 19.0277. Then once that is broken, We're into the meat of the rotation zone. So looking at about 19.1535 as possible resistance. And then we have the declining 21 coming in at 19.2185. That's all we have for you. Back to you, Bob.
Just got a news alert. A British envoy has submitted a letter to the EU president formally starting the Brexit process. That's from the BBC, but they're all reporting it right now. Really quickly on crude, there was a Libyan pipeline shut down. We'll talk about futures this afternoon, so I'll go more into it then, and we'll have the EIA numbers at that point. But a Libyan pipeline was shut down by militants. Interestingly enough, not really with violence. They, I guess, were owed some back wages for providing security for this particular pipeline. So it's affecting about 250,000 barrels a day of Libya's 700,000 barrel production. So you combine that with the gasoline draws, and it's understandable why crude oil would be up a little bit more again this morning. Cheers, everyone. Please hit like and subscribe, and we will talk to you guys later. Thanks for watching.